Hello and welcome to MarketBeat Monday. We are so glad that you could join us here today. If you're here for the first time, welcome. We are very happy to have you as part of our YouTube community. We are on every Monday at market close for a live stream with our analysts, Chris Markoch and Thomas Hughes. Guys, we are so thankful for you every week coming on to break down some of the biggest movers in the market. Again, if you're new to the show, this is kind of how it works. We take a cold look at stocks that you put in the chat. You can already see a lot of people watching have put a lot of recommendations in the chat. And so there's no preparation here. We're not researching these ahead of time. We're just going to take the tickers that you want us to look at, and Chris and Thomas will do their best to give a quick rough look at what's going on in the stock right now and give you a little bit of an analysis and some of their thoughts on how the stock's doing right now. This is also a great way to get some ideas on the stocks that are the biggest movers in the market this week. And we often hear a lot of really great ideas or great stock suggestions that have popped a lot or dropped a lot. So that's what MarketBeat Monday is all about. Again, super glad you're here. We're going to start with a broad look at the market today and a little bit of whiplash, I think, for a Monday, Chris and Thomas. We were down so much last week and then turned around completely to start the week. Let's talk about what's behind those moves.
Well, right. Last Friday when I did my preview, I was pretty optimistic about there being a rebound this week. I spent the weekend kind of worrying that I was too optimistic just because of the way the news flow has been going. But this morning or late last night, we did get some good news. Trump says that he's maybe not progressed, but has made some kind of contact with Iran, trying to get some kind of a deal going. Mm-hmm. The market responded really well. We had a nice rebound. We're showing support at the critical level right now. So to me, the market is in consolidation, but we're still going to be moving sideways within this range where we've been the last couple of months. Just waiting, kind of a wait and see to see what happens next. But right now, it's still the situation where we have a lot of fears and concerns that are being offset by positive fundamentals. Right now, I think the fundamentals are keeping the market supported, keeps the outlook kind of bullish. It's just a matter of how long it takes for the market to get, reinvigorated and regain its traction to start moving higher again.
Yeah, just looking at the heat map really quick on some of the biggest winners of the day. I know we saw Amazon, a huge winner today. Also see a couple other of the tech companies doing pretty well today. Yeah. Let's talk about why we saw that boost in Amazon. And Chris, I think you mentioned Broadcom also having a pretty nice little jump today.
Yeah, Broadcom's up like, oh gosh, looks like about almost 4.8, almost 5%. Yeah. Well, I think, Bridget, some of this is just, it's where money flow is going. I think money flew out of tech stocks because that was where liquidity was. And now they're flowing back in on today because this is the day when people are jumping back in because they're seeing stocks that were trading down lower. And okay, I get to buy some of the stocks that you wanted to own and you're getting them at a little bit of a discount. But I think it was more of a liquidity move. I'm not going to be Johnny Raincloud here. Like I said to you before the thing started, we have a pause. That's great. But I think that's all it is. And I think if, the risk to the market right now is what happens if we're getting into Thursday and Friday and we still have a lack of clarity on what's going to happen. I could see a lot of liquidity moving right back out on Friday because people aren't going to want to have long positions over the weekend. But for now, today, it's a good day. And I think it's a reminder that the general trend is still up and to the right.
Yeah, I think to what Chris is saying, it really depends on how strong end of the week selling might be. I'm looking at NVIDIA right now, and as far as valuations go, tech stocks rebounded today because the valuations are ridiculously low. NVIDIA is trading at only 20 times earnings. That's like 50% discount compared to where it usually trades, which is over 30 times earnings. Based on its forward outlook, it's looking at like, see this here real fast. The forward outlook, we've got P&E at like 6 compared to 2035. 6. This is telling me NVIDIA's stock price could rise by 4 or 500% in the next 5 or 6 years based on this valuation metric. And right now, all of the fundamental factors that point to revenue and earnings are still outperforming. So this forecast here is also probably cautious. So the upside potential for NVIDIA and a lot of other tech stocks right now is just really mind-bendingly excellent.
Right. I was working on something for Microsoft today, and their PE is like 23. Ford PE is like 28. I mean, like this is just at some point enough's enough.
Right. The blue chip tech stocks that drive cash and have capital returns and are able to sustain that growth in like the 10%, 15% range, tend to trade at 30 to 35 times earnings. I mean, it's a huge discount that we have on all of these names.
Yep.
Yeah, it's really hard to ignore that Microsoft chart, and that was one of the stocks someone asked you guys to cover today. So we'll hit that one right away as one of our first ones from the chat.
Sure.
Looking at this stock, I mean, I know we've been calling this one a buy for so long now. The stock has been on a downtrend since November. It had that huge drop at the end of January, and it's still just been going down ever since.
Right.
It hasn't really fully found that bottom yet, it doesn't look like. What are your guys' thoughts on whether it's a buy?
So I think Microsoft is a buy. I think what's happening with Microsoft is that it's less of an AI infrastructure name than some of the other companies and is more of an AI application name. So it is a hyperscaler. It is critical to AI infrastructure, but I think that the long-term story for Microsoft is the application of AI, inferencing, and we're still shifting into that stage right now. So the stock price has corrected, very hard from its peaks. But if you look at the long-term weekly chart, the bottom that we have right now actually aligns with a long-term uptrend. So we're down pretty hard, but this is the market correcting and getting itself, reset for its next move, which I think will be supported by the long-term trend, which includes AI. But again, for Microsoft, is more of the application and the business spending on inferencing than so much on infrastructure capacity. Because like Microsoft isn't really making capacity so much for other AI modelers the way that Amazon or Oracle or some of the other hyperscalers do. To me, it's more focused on its own operations.
Right. Yeah, I agree with you. I mean, Bridget, like I said, this is fresh in my mind. If you look at the weekly chart with the candles and look at where the 200, the stock's finding support. If you look at stock right now, it's getting support right at its 200-day moving average. The RSI is clearly in oversold territory. So, it's always risky to call a bottom, and I'm not going to say we are at a bottom, but I would have to think that I think this is a very viable position for Microsoft right now. Especially when you factor in the valuation, which is like Thomas said, you're getting Microsoft at 23 times earnings right now.
All right, very good. Well, let's move on to some of the other names. We've got to rapid fire through some of these because we have so many people dropping suggestions of stocks they want to talk about, and some of these sound really interesting. So we're going to get started. I'm going to give the two of you a couple of stocks to look at. The first one, because I think it's interesting. Thomas, I'm going to have you look at SMCI. It sounds like this is potentially continuing to drop quite a bit right now. So Thomas is going to look up SMCI. And Chris, I know I mentioned this one before the show. This was one of the first stock tickers to come in today, is IBRX. So let's dive into that one really quick, Chris, while Thomas looks up SMCI.
Sure.
Yeah.
So IBRX, it is up like 378% year to date. It's up 249% overall in the last 12 months. But I think what's gotten some investors' attention is it's up about 10% in the last 5 days. So what I'm seeing here, Bridget, is the company has a drug on the market called Anktiva, if I'm pronouncing that right. If I'm not, forgive me, please. And so the company, it's a cancer drug, and the company just got approved to put a new recommendation on it for the treatment of unresponsive non-muscle invasive bladder cancer. So this adds another indication for the drug that was not there before. So obviously it expands the market. Quick to note, that indication is not yet approved by the FDA. So it's basically an indication that they're allowed to make, but it's not an FDA approved thing yet. Again, that's just something investors have to factor in. The stock's gone up very sharply within the last obviously 10 days. And when I'm looking at the chart since about the middle of February, but it was already starting to come down pretty hard off of that February 24th peak it made around, about $11.50. So this is going to be volatile. The company's not profitable yet, but they are starting to generate revenue, and investors need to be careful here because these stocks can move just as fast in the other direction. Not owned very much by the institutions, but the ones that do own it are buying it pretty heavily. So
I was going to say the institutional ownership here is very, very minimal, about 8.5%. The other thing that stood out too is looking at short interest. It's above 42% on this stock right now. So quite a bit of short interest on this one.
Yeah, again, it's a stock that was moving up higher because it got a drug approved, and that drug is in market. But now it's got to scale it. It's got to do more. These things take time. But biotech is a hot sector right now because a lot of people are figuring out that there's some asymmetric upside in the sector, and this could be one of those stocks. But again, right now the stock's running a little hot, so traders just need to be careful here, especially like you said, you've got 40% short interest and only 8% institutional ownership. That's a heavy lift for retail.
I think so. I think it's a good look at that one. A quick cover. I'm going to have you look at BT next. This is one of the other early comments. Thomas, let's look at SMCI. This stock just seems to be having a really rough year. Oh, I can't hear you, Thomas.
I'm muted so I could cough in peace, not bother everybody. So this stock, looking at the news flow and knowing what happened recently, this is pretty much a train wreck. This company is excellently positioned for AI, should be doing gangbuster business, but has proven to be completely untrustworthy. They recovered from their accounting issues, but now they're being charged with smuggling GPUs to China. So even if they get past this, there's just no way that an investor can trust the company. What else is going to happen? This company, this business is going to need to completely clean house in some way where we know that no legacy people are involved, or break it up and sell it, because I won't put money in there. What are they going to do next? So maybe there's a trade here. Maybe it's at a value. It could rebound. That could be good news. But right now, with them doing what they do and knowing that something else will happen, or thinking that it will happen, there's just no reason to put money in this one.
I think that's this is the most interesting one we've heard from talk about. Is we didn't even look at any fundamentals or anything. Just that the headlines are enough to stay away from this one right now. And I think that's where this company has been. It feels like for the last 2 years.
Major federal international laws. It's you're not trustworthy. We can't trust you. We don't know what you're doing. Who are you working for? What are you trying to do? So no, just no.
I think that's a really good look at SMCI. And again, I'm just going to go through a couple of the fundamentals quick. Just looking at analyst consensus price targets, you can look at it from those perspectives. Like you said, there's so many indicators that this should do well, that the analysts think that this company has potential. But do you expect those price targets to totally change given this recent news?
Well, there've already been 3 revisions in the last 2 days. 2 of them are downgrades. There's one of them still seem a little optimistic. Went from outperform to perform. One of them is to underperform. So we definitely have a downshift in analyst sentiment. I would expect to see more of those come out. And a lot of what I see in the headline stream is what I've been talking about, which is just this company could, but isn't. And should you invest? Probably not, because you just can't trust them.
All right, very good. Well, I'm going to have you look up NRGV next. This is one of the earliest stock tickers to come in. Again, we have so many different stock tickers coming in right now. I'm going to try to get to as many as I can. One way to make sure that I see your suggestion and get to it is to do a super chat. You can just throw a couple of dollars on a super chat. It'll pop up for me to make sure that I see it. Because again, we get so many different suggestions coming in. I try to get to as many we can, but we can't get to all of them. If you love the show and we love what we're doing here on MarketBeat, make sure to subscribe. If you're not a subscriber yet, I would love to have you officially join our YouTube community, and not just for our MarketBeat Mondays. If this is your favorite, please join us every Monday for our live stream, but every other day of the week, we have a fresh video out, oftentimes with Chris and Thomas, but we have a wide variety of different guests and analysts on the show, so you'll see a whole bunch of different opinions on MarketBeat, and that's what I love about what we do. We cover all kinds of different topics and stocks too, so subscribe to the channel, hit a like on this video and any other that you see. It helps us out a ton, and I really appreciate the support you guys always give us. Let's get back to it. Chris, let's talk about BT. This is a little tiny little company.
Right, and they are a company that is involved in digital asset mining, which for a lot of people means Bitcoin and or Ethereum mining. But in the case of Bit Digital, they're going beyond that. They're trying to get into that realm of data centers, AI, high performance computing. They're trying to get into that sector, which would help smooth out some of the earnings volatility and trying to bring in that recurring revenue and that sort of model to it. I'm looking at this. I'm looking at the earnings. Looks like they're growing revenue in the last quarter. Well, actually, I don't see the last quarter. The last quarter's coming up here on April 1st, it looks like. But so looks like revenue's been kind of hit and miss as far as growing year over year. They're still not profitable. Fairly good amount of institutional ownership. It's almost 50%, and institutions have been buying, so that's good. Short interest is around 18%.
Yeah, one thing I see in this one, Chris, looking at it is there's one or just a couple of consensus price targets out there, and the high end is 7, the average is 6, the low is $5, and the stock's currently around $1.50. I'm curious if maybe analysts just aren't paying close attention and those price targets came in a while ago, and that is the case. We're looking at price targets that were from January of last year and November of last year, so nothing all that recent. But it is interesting to see that there is speculation that this company could grow.
Yeah, and I think it's because of where they're trying to, of what they're trying to pull off. If they can prove that they're a player in this AI high performance computing market, that could be something. You're probably going to have to wait to hear what happens at, when they give their earnings report to see that, and what is the current weakness in Bitcoin and Ethereum going to mean to that? Because that's been something that's been part of the Iron story, which is a company, I'm not going to compare the two companies, but a company that sort of it rhymes with this company in terms of a company that was a pure Bitcoin miner that has now made that transition into that. So, interesting company. First time I'm really paying attention to it. We'll just have to see how it goes.
All right.
Stock's been in a really nasty downtrend, though. I mean, despite all the positives I just said about it, it's followed the path of cryptocurrency down since the end of October. Let's just say that.
Yeah, a potential buy the dip opportunity here, but a very risky play, I think, is one thing to consider when you're looking at a stock like that in such a downtrend, right?
Yeah, I would say what I would say is I think you're going to have to wait to the earnings report to see what type of risk you're really taking here, because it could be, that they've really got more business here than we think, but otherwise, yes, it's as a proxy for Bitcoin, or Ethereum is more accurate for BTBT, but still as a proxy there, that's not a very interesting to me. But if it has made this pivot, then let's see.
All right, very good. Chris, the next one I'm going to have you look up is a quick look at LFT. And then let's get over to the other one that you're looking at, Thomas, NRGV.
Right. Energy Vault. This one is pretty interesting. They have a variety of solutions for storing energy. One of the ones that's really interesting is the long-term storage that they're co-locating with green energy generators like solar or wind. But it's these huge towers. They use the green energy to lift up giant blocks, and then the blocks are storing potential energy that can be released whenever they need it, with no degradation. So this is a super long-term storage solution, and it's getting a lot of traction. Their backlog is really growing quickly. Revenue growth is pretty robust. They're already profitable. They're raising guidance, and we have some institutional activity showing some support. All of these details are culminating in the charts. We see the stock popped last year, moved above the cluster of moving averages. Early this year, it corrected, but now we're consolidating and forming a support base at the cluster of moving averages, just showing a market in transition. I think if we get some more positive news and some continuation of these trends in the following earnings release, this market could pop again and potentially set another new high. The one thing that gives me caution, though, is the analysts. There's not a lot of analyst coverage yet, and right now the stock is pegged at reduce. So we're going to want to keep up with the news, keep up with the upcoming earnings to make sure that it continues to build momentum. And then hopefully we'll see the analysts also get on board and start accumulating the way that the institutions are.
Yeah, I think this is an interesting one to look at. And actually, I think the idea is fascinating. And back in, I think it was over a year ago now, exactly a year ago, I interviewed the CEO of Energy Vault. And I was just looking for a link for you guys so I could put that in the chat really quick. We'll see if I can do it. If not, go to MarketBeat's YouTube page and search Energy Vault. It was a really great interview with the CEO of Energy Vault who explains the company. If you're interested, go check out that video too. All right, let's move. Anything else you want to say, Thomas?
Well, I was going to say one of the things driving it now is a shift. It had been just a pure play on equipment, but now it's turning into an operator. So it's going to be building its own energy storage facilities that they will operate and to sell power to other people. So that is helping boost sentiment. It's providing a longer term, a visible revenue stream.
All right, very good. I'm getting to another one that was an early ask from our viewers was DPRO. This is another company where we've talked to the CEO before. So we'll do a quick analysis on that one. Thomas, when you're up next. Chris, let's get to LFT. And this one can be a quick one. This is a different kind of company, right?
Yeah, it's a real estate investment trust, or REIT, and they focus on they focus on commercial mortgages. They might have just reported earnings, Bridget, once the market closed, because I saw their stock has jumped about 5 cents, which is a lot for a stock that's only at $1.33, closed at $1.33 today. So they might have just reported earnings. They were supposed to report today, so that they might have just reported earnings now. I'd have to hear what happened in the earnings report. I mean, other than that, I just see a lot of headwinds for this stock. Potentially higher for longer interest rates. That's not good. Commercial rate exposure, that's questionable. There's some concern about whether or not they're going to be able to sustain their dividend, although I did see a headline that said apparently they did issue a dividend, so that's good, but I'm seeing 160%, dividend payout ratio right now, so you'd have to be questioning a little bit about the health of that dividend. But yeah, there's a lot of things to question about where this stock is playing in terms of the commercial real estate sector. But again, it looks like they just reported earnings, and they must have done pretty well because the stock is popping after hours.
All right, very good. Chris, I'm going to have you look up SENS next, SENS. And let's get to DPRO. Again, we're trying to rapid fire through as many of these as we can. Just a really quick look and analysis of them. So Thomas, let's look at Dragonfly drones. This has been a really popular stock on the channel really almost all year.
Well, right. So this is another company with a pretty good outlook. The chart reflects the bottom and shows a market in transition, potentially gearing up to reverse and to start rallying. We've got a revenue ramp offset with no profits. We've got the company driven by a shift to NDAA compliance, which is kind of boosting its ability to service the U.S. government, trying to ramp capacity at the same time, managing cash burn and balance sheet. So this is a potentially good play. Has a lot of headwinds right now. Even though it has good product and a path to selling to the government, there are some other companies that may be a little bit further ahead, more established, better compliance, better supply chains, more contracts. So this one, keep an eye on it. Certainly good for the watch list. Small speculative positions are fine, but just keep up with the news and make sure that it's progressing without burning too much cash.
All right, interesting, Thomas. Thanks for the quick analysis on that one. I'm going to have you look up OTF next, Thomas. Let's take a look at OTF. Let's get to SENS, Chris.
Yeah. So this is Sensionics. They are this is a medical products company, and they're best known for their implantable continuous glucose monitoring system for people with diabetes. Stock's been having a rough year. That's been kind of backed up by, from what I can see, they've been kind of mixed on earnings. They just reported, it looks like March 2nd, had a slight beat in revenue, missed on earnings. They're not profitable. They're not expected to be profitable. From what it's looking like, from what I can see, looks like they're actually projected to have larger losses next year, which is a concern. I think this is a company that certainly the product has appeal. I think the concern here is adoption when you compare it to the fact that there's other products out on the market. For example, there's Dexcom from Abbott Labs and stuff. So I think this is a story about cash burn, dilution risk. It's not covered by a lot of analysts. It does have a price target of like over 240% by the 7 analysts that do cover it. But there seems like a lot of risk still in the stock, and I think that the risk is coming from the fact that it's not seeming to generate the type of revenue that analysts are expecting.
Let's talk. You said with analysts on this one. I mean, it is looking like a over 200% upside.
Yeah,
it's hard to.
Yeah, go ahead.
I'm just curious why the discrepancy from what the price targets are. It does look like the most recent price target is only $9, so that's a much different outlook than some of those $20, $40 targets we saw early last year for this stock.
Yeah, it looks like it got a big price target increase back in November, and that would have been around the last time they reported earnings. I'm not necessarily knowing why, because again, they basically matched what they were supposed to in revenue, but they came in again. It's not a profitable company. It's not expected to. Now, I will say, in fairness, revenue expectations for next year are supposed to be very high, so they're expected to really do well revenue wise, but they're also expected to have larger losses. So again, it's a company that might be generating more revenue and they're still not being able to manage to be profitable. So it's a stock to be careful about. And again, I think the bigger concern that I have is the competition in this market.
All right, very good. All right, I'm going to have you look up a new one. Somebody's asked a couple of times, and I noticed this today too. I was doing some research for another video talking about Lyft, Lyft, having low PE right now, and that it popped up on my radar too. Whoever just commented that, I saw that Lyft is making the list of one of the lowest PEs right now for companies. So take a look at what's going on with that company, why it's so low right now. Thomas, let's get to OTF. I think that this one is one I have not seen on this show on a Monday before anyway.
All right. This is an interesting stock because it is a stock and it is focused on the tech sector, but it isn't exactly a tech play. So OTF is a BDC, that's a business development company. And what this is a publicly traded vehicle that essentially is a private equity investor, if that makes sense. They lend money to small and medium-sized companies that don't have access to other forms of capital. So it's investing in risky tech startups. Its goal is to earn net investment income from its bonds or from the stocks that it buys, and to use that NII to pay dividends. So it's really a dividend play with a risky tech element to it. And within that, I think BDCs can also be risky because a lot of times they end up paying more in dividends than they actually earn as far as profits go. They pay their money at a net investment income. Usually it covers it, but sometimes they end up returning capital to investors. And that's why you tend to see a lot of downtrends in their stock prices. People that are looking to this for an income play, a source of income, should only ever buy it on a dip. Only ever buy it when it's down at a recognizable support target. Don't ever chase that price higher, because there's a very good chance that this stock will just always stay down or tend to trend lower or stay in a range where price spikes are followed by price dips. So you're really going to want to do the best you can to only ever buy at the lowest possible price point, relying on those dividends to help offset any loss of capital along the way.
All right, very good. Well, I can't pick, so I'm going to give you two, Thomas. I want you to look at NBIS and Rocket Lab. These are names we've definitely covered before, but there needs to be an update on both of them. I think that it sounds like they both might be down a little bit right now. So look at both NBIS and Rocket Lab to see what's going on with their recent activity. Chris, let's get on to you. We're talking about Lyft. What have you found out so far?
Well, typically it's surprising me a little bit because typically what I've always known about Lyft is Lyft and Uber actually both been kind of down the last year, but it looks like Lyft is down more. As far as anything happening in the near term, I'm not, I'm not seeing anything in particular. What I can say is institutions seem to be placing their bet more with Uber than they are with Lyft. Institutional ownership seems like it's accelerating with Uber and maybe not so much with Lyft. But you're looking at a company that's, when you just look at what they're doing as far as earnings and Uber's a profitable company. Last quarter it generated about 14.3 billion in earnings. Meanwhile, Lyft, it's a profitable company, but last quarter it generated about 1.6 billion in earnings. So I think it's just a question of size right now.
Yeah, I'm looking at earnings from last quarter too, and it does look like it was a pretty big miss. Although it hasn't, that was a while ago. That was back in November. It looks like it has an earnings coming up in May, but it was a pretty big earnings miss. I do think that the PE ratio is why the question popped up about Lyft. What does it mean for you to see the stock having that really low PE?
Well, again, I think sometimes it just means that stocks are cheap for a reason, and I think this one might be a question of that. Now, I say that, and analysts are expecting, earnings to be up about 122% next year. So if you believe that, if you buy into that, this would be a very attractive price to be buying Lyft at. I mean, it's a very inexpensive stock from that standpoint. Covered by a lot of analysts, got 33 analysts covering it. It's one of those situations. I think it's which stock do you like more? It seems right now that institutions like Uber a little bit more, but that there's room for both. Let's just say that.
All right, very good, Chris. I'm going to have you look up USAR next. We've had a couple of people ask about that. Why don't you just look up USAR and Rigetti? We'll do two for you this next time too, which is helpful.
Okay.
All right, Thomas, on to you. Let's talk about NBIS first.
Right, Nebius. This company has been moving higher the last couple of weeks because of a hot earnings report, good growth, swelling backlog, a really robust long-term outlook for revenue growth and for profitability. Pulled back some last week and some today because there is a little bit of a debt fear. They're raising debt to get capital. But like with Oracle, the debt they're raising is about this much, like right here. And the backlog is like this much. So they got to borrow this money to build the stuff so they can make this much revenue. So we're just waiting for that to happen. So in the near term, there's some volatility, but the chart looks real good. The outlook looks real good. Analysts are bullish. Institutions are bullish. So I would use price pullbacks to buy shares.
Yeah, I feel like this is a name that a lot of viewers have been excited about for a while, and it was in quite a downtrend, if I remember. I think this was one of the first stocks I added to my Bridget's Buys watch list. If you haven't checked that out yet, go to marketbeat.com/Bridget and check out some of the stocks we follow on this channel. And this was the first one I added because there was so much potential. And then it was on that downtrend that we saw in kind of that November, December, even into February period. It's nice to see it popping back up again. A couple ones we've talked about before. Talk about SoundHound. We've had that one requested a few times. Actually, let's get to Rocket Lab first. I forgot about that. Let's talk about Rocket Lab, a quick analysis here. What's going on with Rocket Lab?
So Rocket Labs is a similar story, even to Nebius, different industries, but Rocket Lab is investing in space. It's getting new contracts. It's improving its launch pace. It's got a growing backlog. We're expecting a lot of great things to happen from the space sector this year just because of the influx of capital that's coming, the accelerated pace of commercialization. But like with Nebius and some other stocks that we're tracking right now, they're having to borrow money and to use dilutive efforts to raise capital to help fund their swelling backlog. So right now we have a little bit of near-term concerns capping gains, but the long-term outlook is really supporting the market. So right now I think downside is fairly limited from the $68 level. Give it another few weeks maybe to see these moving averages move up and kind of come up to where the the market's consolidating right now. We may see conditions form for another move higher.
Now, this is one, again, that comes up quite often, and we hear a lot about is potential with the space sector just getting a ton of investment right now. Rocket Lab is really doing so many of the launches that are happening for all the different satellite companies out there.
Right.
I'm a little curious to see if you think that there might be some analyst revisions moving the price targets higher on this one, because right now it doesn't have a huge runway of upside except for on that extreme end. And we do have some high-end upsides, or price targets of closer to $120. But do you think that we're going to start to see more of those upwards price revisions?
I think that we will. Right now, we've got 17 analysts covering it, so that's a pretty good amount. We got some pretty good conviction in that. They're rating a moderate buy, looking at 10% upside.
You see that one, there is a lower price target that just happened at the end of February.
Lower to 95, but that 95 target is still above consensus.
Yep.
So they had some concern. They trimmed their target, but it's still a very bullish target. So maybe it causes a little bit of reaction, but then once the market looks at it and realizes, what it is that actually happened, it's still a very bullish target. I think that over the next couple of quarters, we'll start to see increasing coverage, an increasing number of revisions and commentaries, kind of like chatting up the trends as they develop, which includes just an increasing pace of launches and an increasing pace of commercialization of their technology, which is really providing services for other companies that are trying to launch their satellite constellations or whatever it is that their goal is in space.
All right, very good. So, Thomas, you were on SoundHound next. Chris, let's get to your two stocks. We've got USAR and Rigetti.
Right. Yeah, so with both of these companies, I think my overarching message is probably similar to what I've heard Thomas say about a couple of stocks. These are both speculative plays, very intriguing industries with both, but I think they're both speculative plays. Different stories here. USA Rare Earth, this is the rare earth mineral story. Simply put, we need them. We don't have enough of them. And USA Rare Earth is one of the companies that is positioning themselves to help us get there. Now, having said that, this is a company that's pre-revenue. They haven't begun mining operations yet. So obviously, again, they're not profitable. There is some concern right now about, although the government doesn't have a direct interest in USAR, there's concern about the Commerce Secretary's relationship with Cantor Fitzgerald, who is financing USAR. Again, I think a lot of that's just noise at this point. The big story here is going to be obviously when they get their mining operation up and running and what the potential is there. Analysts seem to love it. There's a lot to like here, but again, this is a story that has to play out over a long period of time. You're going to see some short-term volatility, some short-term movement. It's one of those stocks I think you can be patient on, wait to buy it on a dip as it might be doing right now. From what I'm seeing here, it's down about 7% in the last month and looked like it's trying to form a base here, but that would be my advice with this one. Similar story here with Rigetti. Quantum computing, obviously a sector where a lot of investors want to try to play and try to figure out which one of these companies is going to be the one to get across the finish line. To me, I think that's the less important question than which company is going to get across the finish line. Rigetti is one of many that can potentially do it, but again, the quantum story is still a ways away out there. And Rigetti's had a strong run up in 2025, and it looks like it's so far in 2026, the story's been decidedly different, and I'm not seeing anything necessarily coming up in earnings that's going to change that.
All right, very good. I did want to throw out with USAR. Didn't USAR this year get the announcement of a potential of a federal investment? I know that's been a part of the rare earth story is that federal investment, but do they officially have that commitment yet, or is it just a possibility?
From what I've seen, it's just a possibility. The only thing
I didn't
I've
quite
seen
see anything that looked like it confirmed that either.
Right. The biggest thing that I saw was that there's concern that, again, the Commerce Secretary who used to work at Cantor Fitzgerald, and then Cantor Fitzgerald's a major financer of USA Rare Earth. So there's concern about conflict of interest, and will the government have a shadow influence on the company that shouldn't have? Again, I don't think that's the major issue. The major issue that investors need to think about is, when are they going to be mining? How much are they going to be generating revenue? When are they going to be profitable? Those are the things that investors really should be caring about. And there's a good story there. Again, we don't have them. We need them. This company could help us get them, but it's a long-term play. Investors shouldn't chase this one, but look to buy on very compelling dips.
All right, very good. We got a different one for you to look at today, Chris. I want you to look at ABEO. Apparently, it just had a recent upgrade to $20, and it's under $5 right now. So,
okay.
ABEO. Thomas, we are looking at SoundHound, and this one is painful to look at sometimes. This is one that we were bullish on it for a while, but it's not doing great.
Well, this is a company, it's one of those ones I put in the class of it should be doing better than it is, but for some reason it's not. I think part of it is they've had some turnover inside the C-suite. The path to profitability is a little bit questionable. They've had some dilution to help raise capital the last couple of quarters, and their results have kind of been meh compared to what the analysts have been expecting. So not really a lot of impetus to get analysts to supercharge their followers. So the stock has been suffering. But within that, the sell-off looks overblown. Right now, we're about 35% below the lowest target, which provides ample upside. We just need a catalyst to reinvigorate some buying. That could come in an upcoming release. The February report wasn't all that great. Didn't really give a lot of details to make us believe that momentum was building, but that could change. SoundHound is a leader in voice AI. It provides better outcomes for businesses. So I think it's just a matter of time. It's possible this company could become a takeover target, but it will need something to happen to get the market back interested. One of those things could be profitability. I think that's really a big issue. It's got the short sellers in the market as well. If we get something that clarifies the path to profits, then we could see money flowing back into this one.
Yeah, I think the short interest is good to bring up on this one. And it is so much lower than all of those price forecasts too. So I don't think you're alone in thinking that this is a company that should be doing better than it is. I think that a lot of people expected this one to do better. And that includes some, I think, ownership. Is that what I was looking at? If you're looking at institutional ownership, yes, it's just under 20% of the stock, which isn't very high. But I look at the last few quarters, and you had a lot of institutions buying it. One other quick question with SoundHound, just because I think there's a lot of our viewers who are involved in it already. How long do you hold on? I think that's the question a lot of investors have with SoundHound is, I bought at the dip. I thought it was as low as it was going to go, and it's still down pretty low right now. How long do we hold on to wait for a turnaround, or at what point do you just cut your losses if you've been holding on for a while?
Well, that kind of depends on your strategy and your risk tolerance. If you bought a small speculative position and had an outlook of 5 or 10 years, you could still hold on to that one. But again, if the stock is down like more than 15, 20, 30%, then maybe you've already passed the trigger point where you would have cut your losses. So it's just a matter of what your style and trading style is and what your risk tolerances are, and whether or not you set stops. Once the stock drops down to a certain point, it's almost pointless to sell it because you've already lost so much money. You might as well just let it sit there and see what happens. But again, that's just a matter of personal preferences.
All right, great advice, Thomas. Thank you for that. All right, Chris, let's move on to this new name, at least one I don't recognize from the ticker, and maybe once I look at it, I will.
Right. So it's Abeona. I think I hope I pronounced that right. Abeona Therapeutics. ABEO is the stock ticker. So this is one I haven't heard of, Bridget, but this is we're in the biotech realm, and we're talking about a very tiny company here. Again, market cap of only around 250 million. Story here is that they have a drug named Zevaskin, Zevaskyn. It is not FDA approved yet, but it is expected to get approved in 2026, although that's, as with all of these things, that's not a guarantee. This is a gene therapy for a skin disorder it's a rare and severe skin disorder. The FDA has already accepted the company's biologics license application. There's been no major red flags so far. It's got a lot of things going for it. The clinical data from the trials has been strong. It's addressing a clear unmet need. It's one of those categories where the FDA has tended to be a little bit more, sympathetic towards. So that's good. Again, it's just not a guarantee, but it seems like analysts are believing that it will be, because as you said, the person that was talking about this, yes, H.C. Wainwright last week reiterated their buy reading with a $20 price tag on the stock. That also came after Stifel Nicholas last week set a target for $17 a stock, and the stock's trading at $4.42 now. So, again, I would be following it closely to see when the FDA is going to approve it. But this is one that certainly looks a little bit interesting. And sort of as a cherry on top of that, the short interest is running at about 25%. So if this thing starts to run, it's probably going to run pretty hard because the shorts are going to have to cover pretty fast.
All right, very good. Well, I'm going to have you look up one more, and that's Poet, P-O-E-T. We've had somebody asking about that for a while. So we'll get to Poet for your last one here, Chris. Thomas, let's get to, I didn't give you one, did I, Thomas?
You didn't.
All right, well, let's just take a look at one. Here's a random ticker. Actually, you know what? NVTS, Microvast. We had a couple of people asking about that one.
NVTS, all right.
And I know we've covered this one before. It's a smaller penny stock. But looking at it right now.
What is the ticker?
MVST. Sorry, my bad. MVST.
That's all right.
This is a small one that's been down quite a bit. It's down 48% in the last 3 months, been falling quite a bit. It's underneath what those analyst consensus price targets are. This one was, but there's, again, very few analysts actually looking at this one.
Right.
Do you ring a bell what it does?
It's electrical products. Let me check it real fast. It's
battery company, maybe? Yeah, lithium.
Right. So he's making they're making some next gen lithium ion batteries, but they're not quite as good as some other batteries we know. The recent report was just a few days ago, and they missed. They had some margin impairments, and the stock is down real hard. Yeah, this one looks like a no-go for me. The battery technology is good, but it's not good enough, especially in light of companies like Amprius, who are showing better traction and better products. So this market is selling off. We've got a nice big red candle moving down from the cluster of moving averages, setting a new low, strong bearish momentum. To me, this is not a buy right now.
All right, interesting. I also, looking at it, I see that there has been a lot more institutional buying over the last 3 quarters than there has been selling. Anything to say about that, about the fact that institutions have been buying it in the last few quarters?
Well, I think that they were hopeful, but I think that this report may have altered some sentiment. We've got one downgrade from hold to strong sell. Only a few analysts covering, only 3. One's a buy, 2 are sells. The $3 target, gives you some pretty substantial upside, but it's the only target. It was set way last year, so it has no meaning today. Institutions, only 20%. They have been buying. They bought strongly in the first part of Q1, but they might not anymore. So this is one, it looked like maybe it was good, but this last report is kind of saying that, maybe it's not so great, and that maybe you should wait and for some more news to come out. The chart doesn't look good. Short interest is 15%. The way the chart looks, the way the earnings report was, I would expect to see short interest increasing and institutional interest decreasing, which is certainly a headwind and an undercut to the market.
Well, that's a look at a down stock. And just to end for you, Thomas, on this one, I just wanted to look at AMPX because it's had such an amazing up 82% in the last month, up 114% in 3 months. This has been such a good stock pick for you.
Right. So Amprius, their last report, instead of missing, it beat. They affirmed their long-term outlook. And what we see happening here is it triggered accumulation. So we've got 4 weeks of steady buying. There is some resistance at the highs now. So 3 weeks in a row, we have some high upper candles, kind of limiting the gains, but still 4 weeks of solid buying, sustaining this high level. Volume is ramping higher. Momentum is ramping higher. So this is a market. This is a textbook bullish market. We may see some pullback and some consolidation, but the way that the news story is unfolding, the way that the outlook is unfolding, the way that the chart looks, this stock will be moving higher.
Quick question, do you take any profits if you got that 114% gain in the last 3 months, or do you keep riding this one even higher? Is there a greater long-term outlook than selling some right now?
Well, general rule of thumb is to sell it 100%. That way you get your money back, and whatever you leave on the table is just profits. That being said, I think that long-term outlook for this stock is very bullish. We're exiting the speculation phase and entering the more firmly bullish phase. So again, price pullbacks, you will want to buy shares when you hit new highs, maybe take some profits, but I'm not going to be closing on my position anytime soon, I don't think.
All right, very good, Thomas. Well, let's get to the last one for today, POET. Just looking at a different one. What's Poet?
So it's a company that's in it's in this semiconductor sector. It has to deal with the area of photonics, which we've been talking about a little bit, I know, on this channel. A lot of potential with the company. Doesn't right now. They seem to have a revenue story that's starting to ramp up, and the question is going to be, I think, if that's going to continue over the next few quarters. I see they're scheduled to deliver earnings at the end of the month on March 30th, but I'm also seeing some chatter that might have gotten bumped into April, which that's usually neither here nor there. But I think investors are going to want to see what they can do, and is that revenue, what is that revenue outlook looking like? Again, this is a company that's not profitable yet. It's in an interesting sector, but right now it just seems sort of speculative at this point. Not a lot of analyst coverage. I think I've only seen one that's covering it, and again, I not a lot to say about it. It looks like it's a company with a lot of potential, but might have gotten out a little bit ahead of itself right now, and earnings will tell the tale.
All right, very good. I know there's a few names I wasn't able to get to today. People have been asking about some old favorites we talk about often. We talk about SMCI almost every MarketBeat Monday. BBAI is another popular one. I've seen them. Sorry we didn't get to them this week. We will eventually. I do want to end really quick with Chris or Thomas. Is there anything that you were looking for this week? I feel like I just want to finish it out by talking about the elephant in the room, which is, do you expect that green week that we had today to continue throughout the week, or do you think we're going to potentially lead towards a downtrend on Friday as people are gearing up for the potential of some other geopolitical issues over the weekend?
I think that we will rebound this week. I think, like Chris was saying, there could be some selling at the end of the week. People aren't going to want to keep their positions open unless there's some more good news, which there could be. But again, there's a lot of crazy things going on right now, and even if we get some resolution on Iran, Trump could turn around and attack Cuba. So that might cause some more volatility. But fundamentals are still good. I think we'll get a rebound and just maybe be capped by the end of the week.
Yeah. All right, guys. Well, thank you so much for your time today. And thank you all for joining us for MarketBeat Monday. Again, sorry if I missed the stock that you wanted us to cover today. I'll try again next week. We try to cover as many as we can, and we rapid fired through quite a few today. Thanks again for joining us, everyone. As always, happy investing.